All right, traders, welcome to today's recap. This is Christian from Hertz Tribeca Trade Group, and it is Wednesday, April 17th. So, I don't know what's the right adjective to explain today's market action. I don't know, but a little bit bizarro, I would say. A lot of things going on. Again, we'll start with the beginning of the day because I like to kind of just recap the whole session, which this morning seems like, a long time ago. But if you remember this morning, I just don't understand, and I'll continue to say this, like who is doing this or what the story is. But it continues to be that somebody's pushing up the market here especially like right before the open today. And it almost seems like I hate to use this type of terminology, but it seems like there's some manipulation going on here. Uh, no, again, that's not the right word to use. I hate to say that when people say that on Twitter. It just kind of makes people sound like morons, to be honest. Um, but because when something goes wrong, wrong, people say, "Oh, it's manipulated." But I do think that there's something maybe maybe to that this time. But I just don't understand who's kind of pushing the market up like this, and then only to maybe try to sell it. People who are uh, the sellers in equities, I don't think are really ramping the futures up. It's really difficult for that to take place. There might just be some other phenomenon that I don't know about. I think people also uh, sometimes there's so many different market participation participants in the market that it could just be one group who's doing something and then maybe selling futures right on the open. I'm not really sure and I don't have the answer. But for our analysis, the main thing for us is to react to it and not do anything stupid around the open. So that's something that we've been talking about now for probably a couple weeks. That when this market even if it's like today, it was up, what, 60, 70 basis points going into the open. But even when it's up 20 basis points, it has a very difficult time pushing higher. This market just doesn't seem like there's a ton of new money that's being put to work. It seems like there's a lot of rotations that are going on. But it's almost as if some people forget that this pattern is going on every day. I mean, I've been tweeting this out. You can look at what my morning note says, but I put morning note and I said watch for the same pattern. Futures could, and I send this out before we do our pre-market session, which starts at 9 o'clock. But I try to tell traders every day in the pre-market session, I'm not buying anything in the first 15 minutes, maybe first couple hours, because that is, back in the day when I was on the trading desk, we sometimes used to call the first hour of the day amateur hour. A lot of day traders want to come in the first hour, but really what's been working recently is buying the close and then selling the open. And I know that is very counterintuitive, especially like if you've been a day trader for a while. But hey, that's just how the market is working, and we can't really, we can adapt our system to take advantage of these types of things. But I mean, I can't come in and say, oh, who's manipulating the market today? It's just is what it is. It's how the market is working right now, and it's your job as a trader to adjust for this type of price action that we're seeing. And then you can, and the other thing to do is if you want to, you could buy puts right on the open. And then that can kind of shield you a little bit too while you're trying to possibly get out of some of your long positions, because I know that's a challenge, and we talked about that in Friday's video, that it's really a challenge on gap up days because the market makers will sometimes on purpose, because they're adjusting to the risk. They're pretty wide with some of their markets in the first 10 minutes. And if the first 10 minutes goes by and you feel like, wow, for another 5 minutes goes by and you're like, geez, I really missed out on a nice beginning day. So that's the thing that you could do. You could also trade some futures too. To kind of you could basically short the S&P futures or sell, excuse me, not short, sell S&P futures or sell NASDAQ futures. CME, by the way, announced that they're coming out with the micro minis, which I think is a clever name, where you could go to the CME website, but they're going to be, this is the day after Cinco de Mayo, so that's the 6th of May. You're going to be able to trade, S&P futures for I think as little as like $14,000. So that's going to give you, if you haven't traded futures before, it's going to give you another avenue to kind of hedge yourself right on the open because you're not really paying a big bid-ask spread. Remember, the advantage of futures, most professional traders, they're not, trading futures for alpha. Futures are a hedging vehicle. So just that. I mean, big institutional traders are mostly using futures to hedge because it's the most liquid. It's one of the most liquid instruments out there are S&P futures, and you're not really paying a very big bid-ask spread. Now, you're not doing that with SPY or anything like that either, but it's one of the most, it's if not the most liquid contract out there. So anyway, I wasn't going to start with that, but I think that's going to be coming up in a couple of weeks. So you have time if you're not really well versed on futures. You have time to kind of set that up with your broker because I think that'll be an easier way for retail investors, retail traders to kind of hedge themselves. So that's what we got going on, and I mean it's pretty remarkable that we're basically that this again is going on. So again, we have a plan. We know how to kind of deal with that. Let me talk a little bit. The other thing is IWM that I think is really interesting that's going on right now. This again, one of the things I said was in the beginning was watch IWM, bid up again like everything else on the open, but completely sell, big sell off in this. And this to me is kind of giving a little bit of a warning signal. So if I bring up, sorry, I don't have this up ahead of time. And I know Bloomberg is a little bit slow because I've got a million things running on my computer right now. But what I'm trying to get to is the relationship between IWM and S&P. I put this out earlier, and some people were kind of, arguing with me. I didn't argue back. Sometimes I do. It depends what mood I'm in. But, it's coming back to the December lows. This is IWM is in the numerator and SPY is in the denominator. Remember, this was a pretty decent warning signal. This did bottom around the end of the year. But this does not give me a warm and fuzzy feeling. For me to really take a lot of new risk, I want to see small caps lead. Again, this is for most of the beginning of the year. IWM has led. So what has happened basically since the beginning of March? Really nothing bad. The market has continued to run, and we'll go to the S&P chart now. S&P, by the way, same thing. Not quite as bad as small caps, but I mean, it's just ridiculous that this is going on. Now, I'm sure, like, even if we opened up here, we would probably still be going lower. So I guess it gives you a chance to kind of get out for some gains, but it just doesn't make a lot of sense to me. Yeah, so I mean, this is what's been going on since the beginning of March. We still have been moving on a nice trajectory, but it's starting to kind of feel like a warning signal that these small caps are really moving down. Now, if you go into the components of small caps, financials are a big weight. There's also some biotech in there, so we'll talk about that next. Let me talk about the good for, well, maybe why it's not so good. But the semiconductors are kind of have a mind of their own right now. They were up 1.5%. Notice that gap up. I mean, I think things are. I think personally, again, and I'm not telling you what to do. I'm not giving any advice or recommendations on this. This video is for information purposes only. But if you're not taking profits here in semiconductor land, you really have to think about what you're doing. I mean, this is moving on pure momentum, and this last leg up was because of a court case, right? So I mean, these are not really, I'm not a fundamental person. I'm more of a technical person, but you like to have some fundamentals and some reasoning behind why you're going long some things other than just a chart, in my opinion. Which again, I use charts extensively, but what's the fundamentals behind? Now, of course, they are transferring technology over to 5G, so that's a catalyst. But I think for the most part, names are really getting ahead of themselves. they've had a tremendous rally, and I would be a net seller. I don't. I've been kind of playing around with some names, but like we traded a little bit of AMD today, which has been an underperformer. What's also interesting is you look at two of the names that were really good in yesteryears, AMD and Nvidia, and they're not. They're the underperformers of the group. I was looking at Nvidia thinking, okay, well maybe this can kind of catch up to the group today, but the value areas uh, really gave a great indication right around the open. It could not get into value on the open. So that was a great signal because this was right around the open this morning. So good note take. Again, a lot of times what we don't value sometimes is when we look at a trade and decide not to take it and it sells off hard. There's some value into doing the analysis and deciding not to take a trade and it ends up blowing up, right? Those are good things. So sometimes just missing a trade that doesn't work, you know, that does not work or sells off pretty hard. That's even like a little bit of a pat on the back, right? That you're not losing money. And I think that's an important concept right now. After a big run, I've had just a tremendous 2019. It's one of, I think, the best starts I've ever had in terms of P&L. Now is not the time, if you're not feeling right, to go crazy into this market. Now is the time, and it's always the hardest thing, in my opinion, after you've had the market has a big run, to not give it back. Now, you don't have to do a whole bunch of crazy things. You want to basically in your account compound returns, right? That's how you really become, you really build wealth. So you don't have to take a whole bunch of money out of your account. If that helps you, you can. But that's how you compound returns. So I've heard this before on the Twitter sphere is, oh, take money out of your account. Don't necessarily have to do that. You just have to be disciplined. If you're not disciplined and that's a problem for you, then maybe take some of your cash out and just put it into a different account for the time being. That can help. But overall, you want to compound returns. Just you want to be careful when the market gets overbought and when we're starting to see things break down a little bit. So that's the semiconductor group. That was super, super strong. I'm going to talk a little bit negative for another couple minutes, and then then I'm going to circle back to some positives. So just bear with me a minute. So of course, I have to talk about the healthcare group because that just got absolutely obliterated today. And notice it's the whole group. It's really notable when the whole group does this, not just one or two stocks. And I know some people in the trading room were like, wow, look at this stock and look at this stock. And, that's true. And we'll go through a couple stocks because, a lot of people are more single stock traders than sector or ETF traders. But this is obviously the whole group that's being taken down. Look at the volume today in some of the healthcare ETFs. Right, and this is sometimes where everybody just selling XLV. Look at the IHI, which is medical devices, which has been one of the strongest groups. Again, it doesn't this ETF doesn't trade that much. It normally only trades like a couple 100,000 shares a day. I think it is 200,000 shares a day. Today it traded 1.5 million shares, 5.5 times normal volume. A lot of that was in the morning. At one point, it was trading like 12 or 13 times. IHF, which is the first one, that's the healthcare providers. That was the first one to really get hit. That was kind of the canary in the coal mine with the political stuff going on and about healthcare for all. That was the first group to get taken down, and then last was really the medical devices and the biotechs. In the middle was healthcare. So I've got the XLV chart up here. So let's take a look at the daily chart for a minute. I did mention, we talked about this yesterday. I didn't think that we were going to hit this quickly and with such powerful selling. Look, by the way, it does feel like a selling capitulation when you see this volume in here. So we do have a version point of control taken out. Let's see what this looks like on the weekly chart. See if we can come up with a support level. Unfortunately, I don't have one right here. Doesn't mean it can't turn around, but especially on this crazy volume, And if we go over to, I'll look at IBB too, but I predominantly like to look at XBI because that's a good representation of the whole sector. IBB, of course, is market cap weighted, so your bigger stocks like your Celgene, your Biogen, those are really it's really skewed to about four or five names in IBB. So XBI, it did take out one of these Virgin Point of Controls. Full disclosure, I've been long XBI because I've been looking for a breakout. A break basically up here. So, that trade didn't work for me. I even tried to add to it today before this was down 4.7%. But again, look at the volume. So again, I mean, this may have a little bit more downside to go, but usually with this type of volume, I mean, I took a shot at this as well today on that Virgin Point of Control. I do like to follow my indicators, and the VPOC indicator. While there is another one down here at 80, I think it's worth maybe just an inside day, maybe a short-term rebound. One of the things that option activity will kind of help with. One of the reasons why I think following or at least watching the tape, maybe not following, but watching option activity will give you one of the best insights to what the institutional crowd is doing if they're buying the dip, right? I always say this, especially when we have like a multi-day sell-off. I don't want to be the first one in. I want to wait until some of the big money, the big institutional funds. If I want to see them buy the dip, that tells me that there's some appetite. And for the first half of today, almost I would say the first 3 quarters of the day, so probably about 2 o'clock, there was crickets. There really wasn't any dip buying going on in healthcare, medical devices, or biotech. Nothing. Small, tiny, couple small, tiny orders. That's it. Towards the end of the day, and the beginning of the day, we did see put buying, right? So we saw some XLV put buying. This was right around 10 o'clock. It looks like they probably made some money on these today. 2 different orders, May and June. Then, as we get closer to the end of the day, there was a little bit of picking, right? I mean, so look at the size order. This is $1 million. This one was also $1 million. So somebody really probably hedging themselves pretty decently, or maybe speculating a little bit to the downside, right? So really, sorry, I'm just reading a headline on Bloomberg. So some really big chunky put flow. Notice at the end of the day, somebody was like, I would call this dipping a toe in the water. This was like 1,600 of next week's XLV calls for 80 cents. What's the premium that? It's $100,000. So it's about a tenth of the risk of one of these orders, right? But we saw this a couple times. We saw there's 2 orders. If I bring up more XLV orders, you could see that there was another sweep for next week. Again, not the biggest stuff in the world. I think it was this one down here. So there was a little bit of call buying. There was also the order that I thought was most interesting, which I bought, was TMO, Thermo Fisher. Again, analyzing option activity is very, very difficult right now because most of these names are going to be reporting in the next week or two. So you don't know the motivation of someone who's doing that. So I most often I tend to avoid option orders where the name reports earnings in a couple days. It just hasn't really been significant in past quarters where I've seen a call buyer a couple days before a name reports earnings. It doesn't mean anything. The logical thinking is, oh, maybe they know something and they're buying calls ahead of the report, and then 50% of the time the name goes down on earnings. So there's really, I don't think there's any edge in that in the analyzing a lot. That said, I did like this order. I was look specifically, and I said this on the private Twitter feed. I was like, I'm really looking to see if somebody buys something in medical devices. TMO 209, the May 290 calls. Now these are way up here. These are back up here. So I think this is a pretty, even though it's the premium of $385,000. I think it's just too far out of the money, and maybe they're going to hold this order through earnings. I just thought it was a good place to get involved. So I bought closer to the money TMOs, and I was able to take half the position off for profits because it did rebound quite nicely. You could see what it did, literally on the lows of the day. So the stock moved up about $3. So I took off half, and I have half remaining. I went into the 270s. I think that's a little bit easier, and that's something that I'll get out of before they report earnings. I don't hold swings into there. Okay, so that's the healthcare space. Like a couple other names that I'm watching, ISRG, which reports tomorrow after the close, even though we have a holiday on Friday. I find that weird that they're doing that, but another name down from 586 to 525. One of my favorite names in this space is EW. Notice it filled this gap. It gapped up on their catheter getting approved, I believe. So this has come all the way in. Maybe the bottom of value might be a place. Also, they report next week. So again, could be an earnings trade. So ISRG might be an earnings trade that I try tomorrow. And we'll go over that in the room tomorrow. So again, I'm in 20 minutes into the video already because there's a lot of stuff to talk about, a lot of rotations. Now, is this going to spread to other growth areas? To be determined. I think the software group, as I talked about yesterday, I thought it looked very vulnerable yesterday. I thought there was some selling that was going on that was pretty heavy. Well, that continued into today. So I try to again practice what I preach and give people a heads up. And I was all over that on the private Twitter. I said, watch out for this software group. Once it starts to go to the down. Now again, it hasn't even broken the 20-day moving average, but I think this name Team reported after the close. This is a small cap name, so I don't know if it's really going to affect the whole group. But Team is down to. They didn't have bad numbers. I think their guidance was actually a little bit better than expected. But right now, I mean, the stock's down to 99. People seem to be rotating out of some of these higher growth areas, and the software group has been the darling of this rally, this 2019. So I would not be surprised if there's more profit taking. The way that you have to look at this is this whole group is kind of it's been cooking, right? It's hot. So if this group happens to come in a little bit, it's probably going to set up a great buying opportunity. But you have to be patient with it, right? You have to kind of let this come in. The only thing, so I sold yesterday. I was in PS, I sold that. I was in Zscaler, I sold that, and I was in I think two other software names. There was one other name that I was in, and it's escaping me. But I made sure that I cleared out of the majority of my positions. I think also cyber names are getting hit a bit. Maybe not so much. Cyber software is only down 2% today. Um, what's the ETF here? Is it SIB or Hack is the one? Let's see what this group looks like. Yeah, I mean it came off the highs pretty decently, but yeah, these aren't really corrections. But I would watch them. I would pay attention to them. The one that I'm still holding in the group is Salesforce, which I think is best in breed in the name. And I think that that has to hold right here. It closed on the lows today, which is kind of not what I'm looking for. And let's see if this is reacting at all. I think they rolled some calls. Well, it looks like it's bid up there a little bit. I'm not sure what that is, or why it went down. Oh, maybe because it went down on the team. But Salesforce, I think someone rolled some calls. This was the June 160s that they were all over, and they may have rolled these, although they don't really look like they're being bought. I mean, it could be a call seller too, so you just don't know. They were not swept, but I think they rolled them from 160 down to 155. Now, I would think that they were accumulating those 160s, but I still think that's a long position if I had to guess. Okay, so let's talk about a couple other things that are going on, because then if you turn to the industrial space, I think this industrial space looks pretty good. We've talked about Caterpillar before. Caterpillar kind of sold off that beginning of the day bounce, but Deere looks interesting. Honeywell, which will be an interesting report tomorrow. If you haven't looked at the Honeywell chart in a while, been a really nice quiet mover. That name reports tomorrow. I added a trade in BlackRock today. BlackRock closed just better than I think I got this on the dip today a little bit. So the marking above. There was a price target raise, but it's a little bit overbought in the short term. But this is a group that's still way below where it was in last year's levels. And of course, XLF I think closed on the highs as well, or close to it. But so I got longs a little bit of XLF yesterday as well. So that's kind of the story. And I think in our trading room we're doing a great job. If you notice some of the names that reported earnings, like things like URI, which you could see, I think, is up to 134. So some of these other groups may start to outperform, and that's our bread and butter. That's what we do really well. We've got a great group of traders who are calling out different setups. That if there's going to be different groups that now kind of carry the ball a little bit, so be it. You just kind of have to be a little bit prepared for it. All right, guys, thanks for watching. Just so you can see today's option activity, because I do like to show that as a courtesy for watching the video and sitting through me going through my rants. NRG, there was a dip buyer in this one today too. We talked about how the yield sensitive names got hit pretty hard, but nice call buyer came in today. May 40 calls. Again, another name that has earnings right in front of it. FCX, a lot of action there again today. Some calls, or there was a roll, I think, of calls, which again you're going to see a lot with tomorrow's monthly option expiration. So some of these areas. Where did copper finish on the day? I always, we look at copper in the beginning of the day, but then sometimes it looks completely different.